Welcome to the Riskwiser zone, where we navigate the ever-changing landscape of stocks and finance. I'm your host, Louie, and I'm delighted to have you join us today. As we begin this episode, let's take a moment to acknowledge the complexities of our financial world. With markets constantly evolving, it's essential to stay informed and adapt to the shifting tides. Now, let's dive into our first story. In a significant development, Bitget, the world's largest universal exchange, has announced an update to its platform, consolidating crypto spot and derivatives trading within a single Trade tab, while introducing a dedicated TradFi tab for traditional financial products. This move reflects the growing trend of modern traders managing portfolios across multiple asset classes, rather than identifying strictly as crypto or stock traders. According to Bitget's CEO, Gracie Chen, this update aligns with their broader universal exchange strategy, which aims to bring crypto-native assets, tokenized securities, and traditional markets into a single trading infrastructure. As we consider the implications of this development, it's worth noting that industry projections suggest a significant share of global stock trading could eventually move through blockchain-based rails. Meanwhile, in other news, Spirit Blockchain Capital Inc. has announced the resignation of Director Yves LaRose, effective February 19, 2026, and the appointment of John Opperman to its board of directors, effective February 27, 2026. Opperman brings significant experience in capital markets, corporate governance, and audit, which is expected to contribute meaningfully to the company's ongoing strategic initiatives. As we explore these stories and more, it's essential to maintain a balanced perspective, recognizing both the opportunities and challenges presented by the evolving financial landscape. We'll continue to provide you with timely insights and analysis, helping you navigate the complexities of the market. We'll be right back with more from the world of stocks and finance on the Riskwiser zone. Welcome back to the Riskwiser zone. We're diving into the world of finance and investing, where the latest earnings call from Holley Inc. has caught our attention. The company, known for its iconic brands in the performance automotive industry, reported its Q4 2025 results, showcasing a mix of consistency and disciplined growth. Holley Inc.'s leadership position in a nearly $40 billion market is underscored by its portfolio of innovation-led brands. The company's commitment to delivering mid-single-digit organic top-line growth, maintaining robust margins, and generating sustainable free cash flow is commendable. However, it's essential to consider the broader market trends and potential risks that may impact Holley's future performance. The automotive industry is undergoing significant transformations, with electrification and autonomous technologies gaining traction. While Holley Inc. has a strong foundation in traditional performance automotive, its ability to adapt and innovate in response to these shifts will be crucial for long-term success. Additionally, the company's reliance on enthusiast demand and distribution partnerships means it must navigate potential disruptions in supply chains and consumer preferences. Despite these challenges, Holley Inc.'s disciplined approach to mergers and acquisitions, as well as its focus on operational excellence, positions the company for continued growth. The management's emphasis on maintaining a strong balance sheet and reducing leverage is also noteworthy. As investors consider adding Holley Inc. to their portfolios, it's essential to weigh the potential rewards against the risks. While the company's track record is impressive, the ever-changing automotive landscape demands continuous innovation and adaptability. With a balanced perspective, investors can make informed decisions about whether Holley Inc. aligns with their investment goals and risk tolerance. Welcome back to the Riskwiser zone. As we wrap up today's show, let's take a look at a story that's been making headlines in the financial world. The ongoing conflict in the Middle East has sent shockwaves through global markets, with oil prices surging to new heights. A barrel of Brent crude has risen by 4.7% to $85.22, while benchmark U.S. crude climbed 8.1% to $80.67. This significant increase in oil prices is causing concerns about the potential impact on the global economy. The conflict has already led to disruptions in oil production and transportation, resulting in higher gasoline prices. The average price for a gallon of gas has jumped to $3.25, up 9% from just a week ago. This could have far-reaching consequences, including reduced consumer spending and increased costs for businesses. Stock markets around the world have been volatile, with some indices experiencing sharp losses. Retailers and airlines have been particularly affected as high gasoline prices eat into consumers' disposable income and increase fuel costs for airlines. However, some companies, such as Broadcom, have reported strong earnings, providing a glimmer of hope in an otherwise uncertain market. As we navigate these uncertain times, it's essential to remain informed and adapt to changing market conditions. The Federal Reserve's plans to cut interest rates may be put on hold as rising oil prices put upward pressure on inflation. Traders are now forecasting that the Fed may not begin cutting rates again until later in the summer. In conclusion, the current conflict in the Middle East is having a profound impact on global markets, and it's crucial to stay vigilant and adjust our investment strategies accordingly. As always, we urge our listeners to prioritize caution and consider their risk tolerance when making investment decisions. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.